So, Courtney, what should we make of the futures being in the red across the board after we saw that big milestone? Obviously, when you cross a milestone like that, that's a sign of bullishness in the market.
Yeah, I think it's probably just that. I mean, when you have such a huge surge in the markets, which we've had really all year here, and especially after you hit some of these thresholds, you're going to see a little bit of a pullback here, which I don't think is anything to be concerned about. The markets are really still well positioned here through the end of the year. We still have a tight labor market. GDP is continually actually growing, and revisions are going upwards. You're seeing earnings have been coming in very strong. So I think the question is where you're putting your money right now. But broadly speaking, the markets are really set up not only for a good end of year, but for a good 2025 as we move forward.
All right, so you're seeing a good setup. I do want to go back to yesterday. You just mentioned it. CPI came in line for both headline and core, but then we saw yields actually tick up. What do you make into that? Is that a sign of something to come, the fact that it came in as expected, but we still saw yields move higher?
Well, this has happened, right, since the day that the Fed started lowering interest rates. You've been seeing longer term rates rising. Basically, what the bond markets are telling you is they don't believe that the Fed has inflation under control. And you are starting to see that with some of the CPI numbers. They're not quite coming down to their 2% target. And this realistically is going to be something that they have to address. So I think more important than what's happening next week, which at this point, there's pretty much 100% odds of them cutting again. But what is their tone going to be? And are they going to be more hawkish moving forward? Because realistically, there's a pretty good probability they're going to have to pause at some point here, and rates may not come down as fast as we hope. And that's where, when you're looking into 2025, inflation absolutely can be a pressure. So that's where things like commodities, which are one of your most efficient inflation hedges, can absolutely be an important part of your portfolio. So you want to make sure you have some of that in there, because clearly, listen to the bond markets. The story is not over yet.
All right. I want to get to your word of the day, which I think is going to be interesting, because it sounds like you think we may be coming up to what a lot of people would call a hawkish cut. So what is your word of the day?
Yeah, our word of the day is broaden. So, this year, the Mag 7 has been one of the best performers this year. AI has continued to be the story. But what's happening as you look at it going forward is they're going to have high capital expenditures. Earnings growth is probably going to be slowing. So there could be some pressure when it comes to that trade. And you want to start to look at all these other areas of the markets that are really well positioned here. So think of things like your small caps, which has been talked a lot about. You want to even look at things like your foreign companies, things like your commodities, things like energies and pipelines. I think there's a lot of opportunity here. So you don't want to get out of the Mag 7. This is not a rotation, but a broadening. And as you approach the end of the year, this is absolutely the time you want to look at your portfolio and figure out, where can I rebalance here and how can I take advantage of these trends, because the shift is going to be happening.
Courtney, very quickly, I do want to ask you, if you think the rate cut path might be interrupted with a pause, you still want to put money in small caps? Doesn't that change the narrative in some way?
Well, the Fed is cutting here next week, right? So shorter term rates have been coming down, which is going to benefit your small caps. Plus, with the Trump administration, small caps and mid caps actually tend to be a little bit better positioned because of the protectionist stance, where they are more focused here in the US, as opposed to some of your larger companies who have more exposure abroad. And if you see some of those tariffs come in play, and the retaliatory tariffs potentially, that can affect your larger caps more than your small and mid caps. So that's something here you absolutely want to have a piece of.
All right, let's get to your pick. What's your pick for us today, and why?
Yeah, so our pick today, we have several picks here, which I touched on. But small caps we kind of already talked about. Foreign companies too are something that we're continuing to look at here. So this is something that I think China has been the focus, and it's really taken a lot of investors' minds out of abroad. But realistically, you're starting to see some stimulus there, which hopefully is going to come to fruition. But when you're looking abroad, China is not the only story here. That's only a portion of your emerging markets. And when you look at your developed markets here, think of some of the biggest companies are things like Novo Nordisk in your developed markets, things like Taiwan Semi in your emerging markets. So these are the same trends we're seeing here in the U.S. You absolutely want to take advantage of the lower valuations.